Hello traders, this is Fawad Razak, the market analyst for City Index. Today is the 7th of November. So the markets remain in a risk on mode following the election outcome in the US, when we saw a big rally in US indices, lifting the Nasdaq and the S&P to new record highs. As you can see, we've had a strong Chinese session overnight as well. The index there is up more than 4%, and this is in response to economic data from China showing some decent trade figures that were released overnight. Earlier today, we had the Bank of England rate decision. They cut interest rates as expected by 25 basis points. And now the focus is turning to the Federal Reserve's rate decision. And the Fed too is expected to cut rates by 25 basis points tonight. The key focus will be whether the Fed Chair Powell will talk about the potential for inflation to accelerate next year, when Trump is expected to cut taxes and raise spending. Will that boost inflationary pressures is the key takeaway that we will get from the Fed Chair Powell tonight, hopefully. And if the Fed Chair does appear concerned about inflation risks, then the market may start pricing in a slower rate cutting cycle heading into 2025. And ahead of all of that, we have the Nasdaq here rising for the third consecutive day. Much of the buying pressure happened the day before when the outcome of the election was announced. So it remains to be seen how much further the market can rally from here. As we are trading in uncharted territories, there are no prior reference points to target. So it remains anyone's guess how far this thing could rise. But what we can do is highlight some key support levels. If and when the market does turn lower, it's where we would expect to see a bounce, and if those support levels break down, then that could put the bulls in a spot of bother. So the key area of support is this shaded region I've highlighted at around 20,500 to 20,650-ish. This area was previously resistance before we broke above it on Wednesday. So any potential retest of this level could turn into support, leading to fresh gains. If that support area breaks down, then the next downside target could be the bullish trend line and the shaded green region, where a number of technical indicators converge between 20,130 to 20,260-ish. And if we were to go below that area, then we could see the onset of a correction. But we'll cross that bridge if and when we get there. For now, the path of least resistance is clearly to the upside. In the FX space, the dollar index is pulling back following its big rally on the back of the election outcome. The key area for the dollar index is around this 200-day moving average and support at around 104. This area was previously support and resistance, so it needs to remain above that area for the index to remain in a bullish technical trajectory. Now, weighing on the dollar are commodity currencies, including the Aussie dollar, which has rallied quite aggressively, tracking firmer Chinese markets overnight. We've also seen the pound come back following its decline the previous day, when it fell to test this key area of support at around 127.80 to 128.70 area, this shaded blue area, which I had highlighted previously. Here we have price support and resistance converging with the 200-day moving average. We didn't quite get to the 200-day moving average before bouncing back, so we may still do if the FOMC is hawkish, but the key area to watch now in terms of resistance is that 130 handle, where previously the market had found support and resistance from, and it's where the backside of this bullish trend line that is now broken comes into play as well. So that's a key area to watch heading into the FOMC meeting. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.